NVIDIA stock price has been struggling to regain momentum since its peak last year. After an impressive climb through the first half of 2024, the price action has shown signs of exhaustion, now trading around $117, which has dropped over 20% from its peak price. Investors are asking the big question: is NVIDIA still a buy, or is it running out of steam? In today's breakdown, we're diving deep into NVIDIA profitability, valuation together with its recent technical indicators, and comparing it head-to-head with peers like TSM, Broadcom, and Apple. All data and charts in this video are sourced from the website alphastockai.com, a powerful stock comparison platform packed with extensive performance data, hoping you make smarter investment decisions. NVIDIA has been a profitability powerhouse. Over the last 8 quarters, its net profit margin has doubled, climbing from 28.41% to a stunning 56.17%. That kind of margin is nearly unheard of in the tech space, and it speaks volumes about NVIDIA's ability to turn revenue into real bottom-line results. The gross profit margin tells a similar story, improving from 64.63% to 73.03%. That shows NVIDIA is managing production costs with razor-sharp efficiency, all while maintaining strong pricing power in a competitive landscape. Operationally, NVIDIA has scaled like few others. Its operating profit margin surged from 29.76% to 61.11%, showing that the company is not just growing, it's growing smarter. Even as expenses rise, it's keeping its margins fat and healthy. Return on assets increased from 4.60% to 19.79%, proving NVIDIA is squeezing more profit out of every dollar in its asset base. Return on equity leapt from 8.33% to 27.85%, a clear signal to investors that this company knows how to reward its shareholders. Return on capital employed also surged from 5.75% to 25.69%, meaning NVIDIA is putting its capital to highly productive use. Other metrics like EBIT per revenue and pre-tax profit margin also show consistent strength. In short, NVIDIA is firing on all cylinders when it comes to profitability. Compared to its peers, NVIDIA is simply outperforming. While Broadcom, TSM, and Apple maintain solid margins, none come close to the acceleration and magnitude of NVIDIA's profitability improvements. This gives NVIDIA a major edge in both operational performance and investor confidence. Now let's talk valuation. This is where the story gets more complex. Over the last 8 quarters, NVIDIA has carried a premium, and that's putting it lightly. The price-to-book ratio has ranged from 29.12 to 52.31, with the most recent value sitting at 36.56. That tells us investors are paying a hefty price above the company's book value, betting on its future innovation and leadership in AI and semiconductors. The enterprise value multiple is ratio between company's enterprise value with its EBITDA. A high value indicates that the company is highly valued relative to its cash earnings, which could be due to high growth expectations, high debt levels, or both. A lower ratio value suggests that a company may be undervalued or more efficiently generating earnings relative to its overall value. As we can see, NVIDIA enterprise value multiple has swung from 93.21 to a staggering 271.18 before settling at 112.38 recently. While that's a move toward more moderate territory, it still signals rich expectations baked into the stock. NVIDIA price-to-earnings ratio has dropped significantly from 87.38 to 32.82. That's good news for valuation-conscious investors, but still higher than many of its peers. It suggests that while earnings have improved, the market still values NVIDIA as a high-growth play. Price-to-sales ratio is another hot number, fluctuating between 56.06 and 99.29, with a recent reading of 73.73. That's aggressive, even in the tech sector, and it raises the question, can NVIDIA keep up with these lofty revenue expectations? The PG ratio, which adjusts the P ratio for growth, has increased from 0.23 to 2.36. This shift suggests that while earnings have grown, the pace may be cooling, and the valuation may be harder to justify if growth slows even slightly. Compared to Broadcom, TSM, and Apple, NVIDIA trades at a premium across almost every valuation metric. That's not necessarily a red flag. It could reflect NVIDIA's dominant position and AI tailwinds. But it does mean investors need to monitor closely whether NVIDIA can continue outperforming to justify that premium. So, where does this leave us? In the short term, NVIDIA valuation has started to cool slightly, offering a more grounded entry point for investors. At the same time, its profitability remains red hot. That's a rare and potentially attractive combo for growth investors. In the long term, NVIDIA's track record of expanding margins, generating returns, and innovating in AI, graphics, and data centers positions it as a market leader with staying power. But the high valuation comes with expectations. Miss a step, and the stock could stumble. Now let's look at NVIDIA's stock price chart and its technical indicators. NVIDIA's stock price has been under pressure, but is it about to bounce back? It is clear that the stock has struggled below key moving averages, but recent technical indicators are flashing potential reversal signals. NVDA just gave us a bullish crossover. RSI is rebounding, and the price is hugging the lower Bollinger Band. So, is this a breakout setup or just a bull trap? NVIDIA price action may look weak on the surface, but under the hood, momentum is shifting. On March 21st, the NCD line crossed above the signal line with a histogram value of 0.80. That's a bullish signal suggesting short-term upside momentum. But here's the catch, the MECD line is still below the zero line, so while the momentum is turning, the overall trend is not fully bullish yet. Zooming out, the MECD histogram has been climbing from a deep low of -2.22 back in early February to positive territory today. That shows us the bears are losing control and the bulls might be warming up. Now let's check the RSI. Over the past month, it's bounced from a low of 34.27 to the current reading of 46.42. It's not in oversold territory anymore, but it's also far from overbought. That gives the stock room to run if momentum continues to build. We also spotted a bullish hammer pattern on the daily candlestick chart and a bullish figure pattern forming right after that. Both are classic reversal signals when seen near support, just like now. Here's where things get interesting. The 20-day moving average is at $118. That's just a hair above the current price of $117.70. This level could act as immediate resistance. If NVIDIA can break and hold above it, we could see a short-term rally. But the medium and long-term moving averages paint a different picture. The 50-day SMA sits at $127, and the 200-day moving average is at $120.80. NVIDIA is currently trading below both. This indicates a bearish bias. But this could be a great opportunity to buy, since in the past 10 years, the time period for NVIDIA price stay below 200-day moving average is very short. The 50-day moving average is sloping down, showing that the broader trend has been weakening for a while. Until the price reclaims these key levels, it's hard to call this a true trend reversal. Let's look at another indicator, Bollinger Bands, one of the most effective tools for spotting volatility and price extremes. As of March 21st, NVIDIA closed at $117.70, just above the lower Bollinger Band at $113.80. That signals potential oversold conditions and hence at a short-term bounce. The %B indicator is likely below 0.2, which often precedes upward price moves. Combine that with the hammer and Hickey candlestick patterns we mentioned earlier, and you've got a strong argument for a short-term rebound. But don't forget the big picture. The 20-day SMA has crossed below the 50-day SMA. That's a bearish crossover, a red flag for momentum traders. And the 200-day EMA at $120.83 remains a major resistance line. Resistance also looms at $126.94, the 50-day SMA, and $123.31, which is the upper Bollinger Band. If the bulls want to take charge, they need to break those levels with volume. Let's weigh the signals. On the bullish side, the MCD crossover, RSI rebound, and bullish candlestick formation suggest upward momentum is building. The stock is bouncing near a known support level and hugging the lower Bollinger Band, classic signs of a potential reversal. On the bearish side, the price is below the 50-day and 200-day moving averages, and the bearish moving average crossover suggests downside risk unless bulls step in fast. Volatility is high and the Bollinger Bands are wide. That means we could see sharp moves in either direction. So what's the play? Short-term traders may find a setup here. Watch for a break above the 20-day SMA at $118 and confirmation from bullish volume. If the price closes above the 200-day moving average at $120, it could trigger more buying momentum. Long-term investors, this might not be the reversal you're waiting for. Until NVIDIA reclaims the 200-day moving average and turns the longer-term trend bullish, it's wise to remain cautious. If you're going long, consider tight stop-loss orders just below recent support at $107. Protect your capital, especially in this volatile range. So, where does NVIDIA really stand right now? From a financial perspective, the company continues to shine on profitability. Compared to peers like TSM, Broadcom, and even Apple, NVIDIA leads in operational efficiency and capital productivity. Technically, we're seeing a tug-of-war. The MCD crossover, RSI recovery, and bullish candlestick patterns hint at a short-term bounce. The stock is sitting right near the lower Bollinger Band, which could support a price rebound. But be patient to entry at this moment, since its price remains below its 50-day and 200-day moving averages. Watch for confirmation, a breakout above 200-day moving average of $120. Let us know your strategy in the comments. Are you riding the short-term bounce or waiting for a long-term trend reversal? If you found this analysis helpful, hit that like button. Subscribe for more in-depth stock breakdowns like this, and ring the bell so you don't miss the next opportunity. See you next time.